Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Friday afternoon, we have Mark Marex, product development specialist with Nasdaq Index Research, to discuss FANMAG performance, the heavyweights of the Nasdaq 100. Mark, it's great to see you as always. Let's take a look at your first chart here. And of course, this is looking at the relative performance of the heavyweights.
Thanks, Jill. Great to be here, and figured we'd zoom in on earnings a bit, given that we're about 3/4 of the way through the earnings calendar. All 6 of these names have reported, and it's really a compelling story, right? Look at the returns. This is since end of August of last year. We had that kind of correction in the Nasdaq 100 and in the broader market in early September. A lot of these names haven't really gone anywhere since then. In fact, if you take the average of the 5 names excluding Google, they're up about 1%, and that's over, almost, we're getting close to 6 months now. Google's the one standout here. I think their earnings back in October were actually the biggest surprise for folks. That's kind of why you can see, if you look at the green line, it kind of really angles up in late October, early November. But the rest of these, even though they've had blowout earnings reports, the price hasn't moved that much. So the index continues to set new records. But the biggest names, the biggest well-known names, a lot of the stuff was already priced in middle of last year, it kind of looks like.
Yeah, I mean, I didn't put it into perspective till you said it's been almost 6 months since August. I mean, the time is just flying so quickly, considering the way we're working now. And of course, a lot of these names are helping us to do so. So let's take a look at your next couple of charts here, where you take a little bit deeper of a dive into each of the names.
Yeah, so we'll walk through these pretty quickly, but wanted to zoom in on each of the 6 and kind of show people what's the trend over the past 5 years. What's the most recent quarter that was reported, fourth quarter 2020, looking like versus the fourth quarter of the prior year. So starting with Facebook, right? Revenue's up to 28 billion now in a single quarter. That is about 33% higher than a year ago. And versus only 6 billion about 5 years ago. Just think about, the S&P 500 as a whole. Revenues were down last year, as were earnings. And you're talking about one of the biggest names in the Nasdaq 100 growing their revenues by 30% plus. Look at on the right-hand side, Netflix, not too shabby either, up about 20%. So that's Facebook and Netflix. Let's go to the next slide. Google and Microsoft. Yeah. So, pretty similar trend here. You've got Google revenues up, looks like about 25%, 20 to 25%. Microsoft setting a new record in revenues as well. Not as fast of a growth, but again, continuing the story. You're going to see this is kind of like a broken record when we get to the last slide. All these companies have just been hitting it out of the park.
Yeah, and it's a great point that you make, because as we take a look at the last slide here, they're actually growing the bottom line. There's a difference between making your earnings number and then having the bottom line contribute to it.
Yep. And as far as I can tell, except for Netflix, which is the smallest of these, but kind of made it into that FANMAG bucket, these were all also record earnings quarters for the group. So again, look at Apple. Over $100 billion in quarterly revenue. So run rate over 400, getting close to $500 billion revenue a year. That's more than most countries' GDP, if we're being honest. Record earnings. Amazon, same thing. They crossed $100 billion in revenue, record earnings. And again, coming back to the original point, these companies haven't gone much of anywhere other than Google in the last 6 months. So that kind of tells you that, if there's sort of a risk to the broader index kind of going into correction territory, there's not all that much to correct here in the biggest components. A lot of this stuff was priced in through middle of last year when the rally first started to get its legs, and the market started to see ahead of time just how valuable all these companies are.
That's a great point, Mark. Thanks so much for the insight and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.